Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over some ratios. We're going to go over ratios. I've got a palladium to silver ratio, and not a lot of people talk about this. It's not a well-known ratio, but it does work very, very well. I'm going to walk through a scenario just using this ratio and how you can convert $200 into $54,740 worth of paper currency by swapping metals back and forth. I did use palladium in one of my swaps. I swapped it for platinum just because silver was very difficult to obtain at the bottom of the C19 event when the ratio went, I'll say, favorable for silver. And I purchased platinum. Platinum is the cheapest of the ratio swapping metals at this point. Palladium and rhodium have taken off. They're used in the manufacture of cars and the catalytic converters. There's a huge shortage in rhodium and palladium, and going forward, the shortages of palladium are the shortages of platinum, and eventually they'll do some swapping back and forth of those materials, palladium for platinum. So I do think that platinum is a buy, and I'm going to go over those ratios as well. But I'm going to go over through this example just so you guys understand the gist of how this works. And I haven't done that in a while, and I know I've got a lot of new subscribers. So what this is I've got the palladium to silver ratio, and this is just saying that when it's ever, and I just started it randomly at 1998 where the chart started. And then I went all the way till 2021, today. And then I'll show you what I would do and how I would swap things in this. We only swap the metal one, two, 3 times. We did, we're going to do almost 2 round trips. This is one trip and then another trip that if it comes back here eventually. And I think it's going to. And I'm going to make some observations and stuff through this cycle. So in 1998, 1999, you buy your first ounce of palladium here. Palladium was $200 an ounce. So let's just say we buy 1 ounce of palladium right here. We ride this thing up the ratio, and it peaked at a little over 200. I chose right where the bar is at, 215, even though it peaked at 240. I'm going to say that, hey, we didn't get the top of the top, but we did get it at 215 as this thing started to come back down. So I just use that as an example, all right? Maybe you got in low, maybe you sold it a little bit lower and the return's a little bit less, but this is a top. It did break its uptrend line, and we could have identified it roughly at 215. So let's just say we did that. We swapped our 1 ounce of palladium for 215 ounces of silver. We now own 215 ounces of silver by swapping our palladium at that ratio of 215. One thing I wanted to note here is this move up in the beginning is a disinflationary period. This here is an inflationary period, and silver outperforms palladium in those market conditions. This was our bull market from about 2000-ish. This is 2001 where it rotated all the way till the crash of 2009 and shortly thereafter. We rode silver, our 215 ounces of silver, all the way back down to the ratio and where it bottomed. It bottomed at 15. It makes the math very easy right here. I mean, obviously it went all the way down to maybe even below that, almost to 13.5 ounces. But I'm just going to use 15. We swap our 215 ounces of silver for palladium. So it's 215 divided by 15 because that's the ratio. And you have palladium of 14 ounces at the bottom here. This 1998 to 2009 or so, about a little over a 10-year period, 99 to 2009 would be a 10-year period. We increased our ounces of 1 ounce palladium to 14 ounces, riding it up and down and doing this swap. We increased our purchasing power by 14x in that time period. We went into a disinflationary period. This is where palladium usually does very well. And we started to increase. We owned 14 ounces of palladium and came all the way back up to about, and this spiked even higher, I think, than this, but I'm going to say it's about 170. And let's just say we swapped our palladium to silver So we took our 14 ounces, multiplied it by 170, and we now own 2,380 ounces of silver. At $23 an ounce, I'm just going to use that as our measuring stick. It's worth $54,740. We went from $200 and owning 1 ounce of palladium to 2,380 ounces and $54,740 worth at this time, and we'd be riding it downward at this moment. The return is 27.5% per annum, or a total return of 273 times your money. I don't know of any other investment, irrespective of what it is, from 1998 that has beaten 273 times. I mean, maybe Bitcoin or some of these speculative investments. But riding this with physical metals, I think, is probably the lowest risk aspect. Notice that when we were doing our swaps here, it had nothing to do with the dollar value. We are out of the dollar at that point. There's a reason that I use these ratios. Now, you can increase 200 far more greater than 54,000 depending on what metals you're using. You can use all the metals and swap it to other metals when they are incredibly cheap. At this time in 2016, rhodium was absolutely a steal. And if you had swapped to rhodium, this valuation would be far greater than what it is today, maybe even over 10x, or maybe even over $1 million. That's how much rhodium has appreciated. Obviously, this stuff looks very easy when looking backwards. And looking forwards, people always say, well, hindsight's 2020. I can tell you this, platinum is cheap right now. Why do I think that? Let's look at some charts, guys. So I'm going to pull up not those platinum ratios. Here's a platinum ratio. I'm going to zoom in on the left-hand side here. What this is the platinum to gold ratio. This ratio was above 2 in the early 2000s to mid 2000s. Platinum was expensive at this time based off of the market conditions. It fell down and fell down, fell down. It was not in favor, and we're just starting to put in a bottoming process right now. This here, for the ratio of the platinum to gold ratio, is screaming buy for platinum. It's saying that platinum has not been this cheap. It's at 0.5. That means you can buy 1 ounce of gold can buy 2 ounces of platinum. Up here, it was 1 ounce of platinum could buy 2 ounces of gold. If we revert back to that ratio, that means you can increase your holdings of gold by 4 times if this ratio reverses. Now, it's going to take some time. This isn't a short-term, get-rich, quick fix. This is about holding on, letting this ratio appreciate, and it may take, 5 to 10 years or longer. But it's true wealth and true purchasing power that you're going to be gaining against gold. Here's the platinum to palladium ratio. The platinum to palladium ratio back in the mid 2000s, it peaked out at like 5.5, but let's just call it 5 in here. We are at 0.5. This ratio swap movement, if it were to go back to that ratio, means that if you buy 1 ounce of platinum today, that this could potentially yield you 10 times more palladium if it were to go back to 5 from 0.5. That's a 10x, and it could do it in a pretty swift period. In 2000-ish, this was the last bull market we'll call it the real estate bull market and the last commodity bull market. From 2001, it bottomed at about 0.5 last time, and it went all the way to 5 by 5 years. So it did a 10x of purchasing power gains against palladium in 5 years. That's a really good return. And then we've got platinum to silver. Silver, back in the mid 2000s, platinum could buy over 150 ounces up here, but over 140 ounces of silver. Now it can only purchase 41 ounces of silver. Platinum is cheap even to silver. So whenever you have a setup where one metal's cheap to all the other metals, you know it's cheap. Like, it is dirt cheap. Now, I can't tell you how this is going to play out. I can't tell you the exact, how fast, the timing. That is the thing that we don't necessarily know. But I can tell you this. Platinum's starting to turn around. The ratios are starting to turn around on some of them. and it's starting to become more favorable for platinum. Platinum will substitute palladium in some of these catalytic converters. It's not a 1-to-1 ratio, but it's going to be pretty close to half ounce or more that it can replace. And they're going to use platinum instead of palladium with the shortages in palladium that are present right now in catalytic converters. We've got a shortage there. Same with rhodium. So they're going to start hitting platinum next, in my opinion. Now, looking at another chart here, and I've got let me pull it up here real quick. I've got the platinum price, the price of platinum. So this is, let me get me out of here. This is the price of platinum in dollars. And what we see here is the last bull market from 98. This was our buy signal, was down here. And this took a couple of years. You guys have to be patient. And I'm going over this so you guys can understand and get your mind frame and your paradigm correct, that we got buy signals in the commodity buy signal in 1998, just like we have today. We got those same buy signals in 2020. It took a little bit of time to kind of work its way out. And then in 2000, it took off. We had a return move, and then we jetted higher, much, much higher. This move was a bottom at around like 300-ish, low 300-ish dollars, all the way to about 2,100. We went into a consolidation period with the disinflationary period in the recovery phase of real estate. It always has this pattern is pretty well known. It's a 1, 2, 3 pattern, and then we break to the upside. We do a return move. We are doing a return move. This is where I start to get buying aggressively, because your timing, I think, is running out for this metal to purchase at these cheap prices. You always have a break and then have a return move. This could drop down a little bit more. It could go in the 800s. We're at 930 right now, which is a very good price because all of the ratios are screaming a buy for platinum. And if we get down to even like the 800s, I would continue to cost average in. That's my plan. That's my strategy. And I'm going to hold this for a good long time period. Now, looking at this stuff, I'm going to be ultra aggressive. This is what I consider to be the lowest risk, highest returning bets that you can make in the markets. And that's why I hold so much physical metals, is because it's inflation protected, it's deflation protected, because you can't go to zero on a commodity, especially one that's needed in the world. And if the ratios play out, what I'm doing is I'm increasing my purchasing power against all the other metals. And that's exactly what I want to do. I want to buy the cheapest asset that appreciates against all the other assets. The shortages of palladium are the shortages of platinum. And platinum, it could have a little bit of a surplus in 2022. It's difficult to say because things are so dynamic in these markets and changing so rapidly that it may have a surplus, it may not have a surplus. They were projecting surpluses in 2020, and they ended up with a very large deficit in 2020. Then 2021, it was kind of going back and forth. The projections are always difficult to project. And what I see in the charts is that people are buying and positioning in platinum already. And that's exactly what I'm going to be doing this entire time. We've got a good chart pattern. The people are buying it. They're putting in the pattern saying that this thing's going to launch higher at some point. If we get a little bit more of a dip, I'm okay with that. I'm going to continue to buy it. I'm a long-term investor. And over the next 5 to 10 years, I think it's going to go up quite dramatically. And it's going to outperform other metals, which will allow us to swap our metals into other ones. I also think silver is a good bet as well. So silver and platinum are the two that I really like at this moment. And I have a good mix of both of those. And I've got a little bit of gold just because I'll never sell all my gold. It's a monetary metal. So I wanted to go over this. I wanted to go over the opportunity in platinum. I wanted to go over the palladium to silver ratio and how that looks and what it looks like if you're swapping metals back and forth. Now, what are the best metals to buy? What, like platinum? I prefer anything that's cheap. So I buy just the 1 ounce bars, Valcambi bars, Heraeus, is it Heraeus, Arger, or whatever bars. I buy Scotiabank. I'll buy the Pamp Swiss. Anything that is cheap at the moment, I'll buy it. What's a good premium over spot if you guys are interested in buying platinum? I would say something on the lines of $50 to $75 is about what you can get, and it depends on how much you buy. So if you're buying a small amount, it's probably going to be a little bit higher towards the $75. And what I do is I go to eBay. They have it at $75 over spot. I buy it using a credit card and I get cash back. That cash back reduces my premium that I'm paying over spot. I get 3% cash back, so it's 0.97% of the total purchase price. So I get 3% off is basically what I'm getting. And that's how I've been buying it. They're through reputable dealers on eBay, which are bullion suppliers. So I don't think I'm not buying it from a shady thing. I'm buying it from a large company that's providing lots of platinum sales through eBay. So that is one way that I'm doing it and how I'm doing it. The government issued coins are fine too, if that's what you want to prefer. Sometimes you get a little bit larger premium when you go to sell it at a dealer. But most of the time, I would say it's not worth the extra cost. I would say just buy the bar, the 1 ounce bar, and swap it for another 1 ounce bars or coins when you go to swap it. And that depends what you're swapping for. And the reason I still have silver in there is because sometimes silver makes some pretty big moves, especially under conditions that we're in today. If you noticed the palladium to silver ratio, silver was preferable over palladium in inflationary environments. Same with platinum. So I think these two metals are favorable for the conditions that we're going into. We could have, if we have monetary problems, I think both these metals will do very well. I also think gold will do very well. When looking at buying physical metals, storing them can be, a problem for some people. If you're going to store them at home, I would just try to hide them. It's not, you can find ways to hide them around wherever. If you want to store them through a bullion bank or something like that, you're going to have to reach out to a bullion bank, and I don't have any experience with that. I store mine at a different area in a safe, a very large safe that one of my friends has. So that's what I do. I was lucky enough to have access to that. And I've been piling into platinum also because it's a better, more densely way to store value very compactly instead of silver, which takes up a lot of room, especially if you're investing larger amounts of money in it. But I think this is a great opportunity for platinum right here, right now, with it coming back and doing that return move. So that's something that I would look into if I were you guys. If you guys like this content, give me a thumbs up. If you have any questions, put it in the comment section below. Let me know what you have. And if you like the channel, subscribe if you haven't subscribed yet. So thank you for listening, and I'll catch you in the next video. Thanks.